E from MarketWizard.com and eMiniWizard.com on Tuesday, the 16th of June, 2020, about 11:15, and I'm reminding traders to use risk capital you can afford to lose. Markets turn on a dime. Most traders cannot. That's why they lose. And that is attributable to Jeff Cooper, who I have studied. I think he's a great trader. Got one of his books called Hit and Run Trading. Okay, what we're looking at before I wrap up with that last video on market structure is the idea. We had gone into our top box. We said we're going to use 58 paid for sure, use that as our resistance, 64 top of the extreme zone. Then we have to obviously articulate ourselves between the next box. This is the fighting range, this 25 to that 45. We said anybody long side paid for sure, 42s to 45. And then we get the hammer to drop and we start to run backwards, and all of these traders are trapped. Once that happens, we don't know how far we can fall backwards, but we're looking step by step. This is a 15-minute chart. Globex hit the rain line about a point away from the gap, but we did close the late close at 65.5, not the 62.5. And obviously our 5-minute RTH chart, rain line still supported for now. Very rare to go through 3 lines at once. It's a news event. Anybody that was buying, we suggested if you tried early, like in the 85 range and got beat, drop back, take your stop out, try one more time back here near the gap, get your capital back. Then if it can run and get back up in here into that 08 area, good fortune. Half gap trade works and the gap substantially works. And this is our predictive chart. Support box for now. 65 to 62 range. Back up above 85. You're looking at the 05s to 08s. Don't forget where our overnight high was. That was a 13.5 at original high. So that may be the next aggressive resistance zone. And then obviously the top of this box where the IB low broke down at 23.5 to 25 zone. And this is called a mirror trade. Okay, because yesterday we had the fake out low and then we had squeeze, 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 and then we had continuation overnight. And now this fake out here, this overnight run in low volume, we get a pullback and a sharp pullback that is basically trapped the late longs. And this is still just a reactionary trade in range. Meaning we still have to take that low out to become much more convincing that the high is in. I believe today's high is in already. And as such now, this 66, 65 area, very important support to hold. If we can't hold it, then we come back some more and do some more damage south side. For now, I think the high and low for the day are in. It's going to take something extraordinary to break either end. And this is typically an options expiration pattern. And certainly a rollover pattern too. Because better odds for the shorts to be filling positions up at these higher levels. So I think range trading for now, and anybody that's been blessed with some profits today, my goodness, put them in your pocket and run. Thank you, Zeke. Zeke's got the news that Beijing ordered all schools closed, COVID-19. I say it's an options X manipulation. I mean, the bots did not hesitate to buy the gap. And that's part of no need to know the news, just knowing the areas you want to do business, gap close area you want to do business. Certainly, even if you weren't short, think about it. Don't you think somebody would want to take profits coming near the gap? And that usually will cause the sequence trade, the reaction.